morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at Verified Investing. So much to talk about. We got the meme stocks going nuts this morning. I've already done a couple trades on these things pre-market here. Other people in the office have gone long. I've gone short. We've all made money, but that's the beauty of trading and investing. We got PPI data out this morning. It came in hotter than expected. So inflation, at least on the producer side, which is producer price index. So tomorrow we get CPI, consumer price index. Today was PPI data, producer price index. So it's the inflation on the producer side, hotter than expected. Expected at 0.3%, came in at 0.5%. So inflation, at least on the producer side, is hot and continuing to rise. Let's take a look at the charts, guys. Let's get right into it here. So right off the bat, you would think that, okay, hotter inflation, right? You would think, okay, that's going to make yields go up. Well, it did initially. Look at this pre-market move on the 10-year yield, and then it came right back in. The stock market initially dove, and then it came right back up. So again, the reason why, why is the market ignoring this? To be honest, I think it's because the market is saying, as of now, CPI, the inflation on the consumer side that we get tomorrow, is much more important. They're kind of writing off the producer inflation, which is what we saw today. So the yields pushed up to about 4.535%. We're right back to 4.485%. The US dollar, same thing, initially had a big spike higher, as you can see on this chart. If we zoom in a little bit more, big pop in the dollar initially, and then look, the dollar's actually lower than where it was pre. Now remember, the markets go inversely to yields and the US dollar. So when the US dollar spikes or yields spike, the markets go down. When yields pulled back here, what do you guys think the markets did? So yields had rallied up here and then they pulled back. The markets rallied right back. So all in all, when we flip over to the S&P chart here, pre-market, you can see initially at 8:30 a.m. when that data hits, we got a big drop in the markets, and then look, we're basically back to unchanged for the day. Now, it'll be interesting to see throughout today's price action if it's really, really quiet. I do think, again, everyone's waiting on that CPI data tomorrow morning, so that may be the case. But either way, you could just see how initially the market reacted, and then we came right back up. As soon as the dollar pulled back and the yield pulled back, we came right back in. Now, just going back to the 10-year yield chart, just a reminder, we have a classic wedge pattern formation here. Now, the reason why I'm bringing this to your attention is that based on what I'm seeing here, it still is making a bear flag movement. Now, what does that tell us? Well, notice how usually we come in here and we bounce, right? You came in here and you bounced. Well, you've come in here, and instead of bouncing, you're going sideways. You're consolidating. Consolidation in the lower range after a move down is called bearish consolidation. What it tells me is that the probabilities push us to expect at some point in the next week or two, or even in the next few days, a move to the downside on the 10-year yield. All right, next up, let's keep running through this, guys. NASDAQ 100, here it is. This is the QQQ. Initially, the big drop, reversal. We're still down a little bit on the NASDAQ here going into the open. I did see that Nvidia was down a little bit this morning, and so on and so forth. Don't forget Nvidia earnings next Wednesday after the market closes. That's going to be huge, guys, for the market. Probably the biggest earnings overall. Speaking of earnings, well, you know what? Let's get into the meme stocks here. All right, so the meme stock nuttiness is continuing. Yesterday, by the way, this is the pre-market action on GameStop. I'm going to bring this over here. So yesterday, GameStop, and I made money shorting GameStop yesterday, but again, I'm a nimble trader. I got in, got out. I don't get greedy, right? But basically, GameStop yesterday closed around, what, $32 and change, give or take, somewhere in that vicinity. And ultimately, look, this was after hours. It starts to inch up. Then this morning, markets opened for pre-market trading at 4 in the morning, 4 a.m. Eastern time. And then look at the rip higher here. We went as high as $80. So GameStop pre-market was up like 150% here before a big corrective move. And now it's kind of moving back up here. Now, again, could this go to $100? It sure could. But at some point, just like the last time, you would expect it to pull back. If we go to the daily chart and we revisit those past periods, and by the way, this is yesterday. So today, we're so far up here, we can't even see it on the board here. But when I zoom out, you certainly can. if we go out, I've marked off a couple levels that I'm watching on GameStop here. This is that 2021 craziness here. We have a couple pivot highs right up around, I believe it's just around $85 per share, and then obviously your double top up here. So those would be a couple levels I'm watching in case we get up to those levels. Very hard to short though, again. And by the way, in all fairness, going long at these lows was a genius move. I mean, that's been what's worked the best, to be honest. But it's just hard for me to chase these type of things, especially considering that we know that people that bought in the $100, $80, $50 range, eventually this came all the way back to $10. And again, you just generally, whether it's a year from now, a month from now, eventually GameStop probably comes back in there again. I love the excitement it brings. It also brings a lot of people some hardships when they chase and they FOMO into these things, and then eventually they come back in. All right, looking at AMC, no different here. Insanity, absolute insanity. What we can see here, guys, again, if we flip over, let me bring up that AMC chart pre-market. Look at this run. So AMC yesterday closed at around $5.37. This morning, it traded as high as 13 and change, so up over basically 150%. And it did have a big correction pre-market, but now it's pushing back up. The big levels to watch, again, the double top up here on the chart. Now, this one's a little crazier, and I talked about this on Trading the Close. It's a little harder to gauge because if we go back to 2021 on the monthly, in fact, let's go to the weekly here so we can see it a little bit better. If we go back to the weekly, a lot of investors would say, oh, well, this thing was as high as $400 a share, so why couldn't it go back to those levels? Well, number one, I guess it could. But you have to recognize that the company issued so many new shares that if the stock ever went back to the $400 double top level here, that the company would be valued at like 2 times what it was valued at here because the company, again, issued so much more shares. So it's somewhat unlikely that it's going to go back there. It probably if it goes back like here, that would be the equivalent of being back up in this range because of the shares that they issued as a company, basically to stay afloat. They had to, right? They had to figure out a way to get money in the company. One way to do it is to issue more shares, dilute your shareholders, and that's what they've done here. So be interesting to see how this plays out today. I will be trading it. I might go long at certain points. I may go short at certain points. That's what we do in the Apex Live Day Trading Room. We look for the opportunities. When we're into resistance, we short. When we're into support, we go long, and we're nimble. Nimble is key when you're a day trader, or you can get hurt, no doubt about it. All right. Going into some of these other stocks here, guys, Home Depot reported earnings this morning. It's been all over the map, initially dropping on earnings, then popping on earnings, and basically settling in to the negative side. The one takeaway from today's earnings with Home Depot is that the consumer continues to struggle. Right now, everyone kind of assumed that was going to happen here, so that's why it's not down a ton. But it did show that the consumer is slowing, and it just reminds me of all the earnings announcements that we have seen over the last 2, 3, 4 weeks that have shown us that the consumer is struggling. And that's only going to continue here, in all fairness. I think the market, or I should say the economy, has been saved somewhat by the stock market hitting new all-time highs, people's 401ks looking better and better. But I wrote an article over the weekend talking about how Boston Market filed for bankruptcy, Tijuana Flats, TGI Fridays is thinking about it, Applebee's is closing restaurants. The consumer is starting to move away from a lot of these fast casual restaurants that a lot of the lower end income levels were going to because they honestly just can't afford it. They have to go back to the supermarket and shop because, again, they just can't afford to go out to these restaurants because of inflation and costs. Okay, so Home Depot down a little bit. Alibaba, which is a Chinese company, reported earnings. It is down on earnings. Looks bigger than it is, in all fairness. Yesterday it was up about $4 to $5. Today it's just reversing that move. If we flip over to the daily chart, you can see this thing had a big run going into earnings, an amazing run, in fact, from about $68 to $85, and it's basically just correcting back down right to here. So it's just giving back what it gained yesterday, essentially, which, again, to me is no big deal. I actually wouldn't mind if this pulled back more significantly because I do like it as a longer-term investment, but it's got to pull back basically to these levels in here, somewhere in this 76 range, previous pivot highs right along here. here would give me a major retrace to the scene of the crime, which would be a good opportunity to go long. Next up, let's take a quick look at SEC Limited. And again, this one has been wild pre-market. Look at this. Initially popping to $70 from a close yesterday around 65, 64 actually, then dipping back to 64 and then pushing back up. So it's been all over the map. This is a stock, by the way, that back in 2021 was like $300 a share. Incredible, incredible move. But then it collapsed. Just like so many other stocks, it was just way overpriced. And if we flip over to the daily chart here, and we zoom out, I can show you. So it looks like it's had an amazing run, right? It's like, wow, this stock has really done well this year, and it has. But then you zoom out, and you're like, wait a minute. And you just keep zooming out, and you keep zooming out, and then you see something like that, right? And I have this old trend line up here that was marking tops. But look at the drop that it had there. And now it's just been kind of chopping sideways in the lower range, basically digesting the drop. Eventually probably gets a bull run again. But it's basically a gaming. I think it's out of Asia, gaming and kind of e-commerce, right? So that's just something that's going to take some time to reverse to the upside. Other than that, this was a chart that I had highlighted on the website, Verified Investing, guys. This had a nice day yesterday, closing above 18. It's been beaten down. This is WBA. Love this longer channel. You can see every time it gets down to this lower range, it gets these pops. Yesterday, it started to pop up. I would expect this to go back into the mid-20s, although it does have a lot of debt. But either way, it is definitely overdone to the downside. WBA, by the way, is Walgreens here, and that, again, is an interesting one there. Nvidia real quick here. Nvidia down just a little bit pre-market. If we look at this daily chart, going into earnings next week, next Wednesday after the close, you can see that we have this bigger kind of line here. If this line breaks, this is really bad for it. Now it's not, it's got this little mini wedge here, so it could pop to the high range or it could come down here. But really all you care about if you're a bull on Nvidia is you do not want to see it break this 870-ish area, 860, 870 area. There's also a gap fill right in there. So if that breaks, watch out below. But right now, it's just chopping sideways. It's trying to get back to the all-time highs. And with earnings, I mean, maybe they can report great earnings. I do think, by the way, as much as I've said to you guys that down the line, 6, 12 months out, competition is coming for margins. Margin compression will be seen. Chances are you're not going to see that in this quarter yet, or if you do, it's going to be very slight. The question is, do investors and analysts read into that if they start to see it even slightly and start to say, uh-oh, it's coming, right? And that's the fear for investors, is that we know it's coming. The question is, how many more earnings can they report that are good, that don't show that competition before it comes in later on? All right, guys, on that note, we're going to do a spin of the wheel here. The Wheel of Appreciation to find out who wins today. Remember, it was 1 year of TradingView Premium. So again, we are finding out right now who is going to win that. And don't forget, email Lawton@verifiedinvesting.com to get hooked up. And here we go, guys. At NNOV8960. Congratulations, buddy. Great job there. You just won a 1-year subscription on TradingView for, again, the top-level TradingView action right there. And there you go. Reach out again, as I said, to Lawton@verifiedinvesting.com. Without further delay, let's spin the wheel for tomorrow. Let's do this. Let's find out what you guys are going to do. Don't forget, guys, that you have to share this on one of your social medias. You have to be a follower of Verified Investing, either on YouTube or on Twitter. And again, you do those things and you post where you share it. You are entered in and you will be in the drawing for tomorrow. And we will find out now what that is. So for tomorrow, what we're going to do, who's going to win what, and it looks like it's, oh, this is a good one, guys. The Apex Live Day Trading Room, a 1-month subscription, that's $400 right there, and literally we are crushing it in there. Every single day you hear me talk about it as I'm saying, hey, we'll trade this in there, we might trade this. This is where we do it right here. You hear us over your speakers as we give live analysis and our trade entries and exits, and you see our live charts as we're trading these things. And essentially is a reason why we've been doing this since 2007, we've been running that trading room, and it is by far even the best now that it has ever been with the quality of trading talent in that room. So we're going to see who wins that tomorrow. On that note, I do want to thank iTrust Capital, guys. They are a sponsor here. And as I say, guys, all of these big screens, these touch screens, these cameras, everyone here, they are making it possible for us. iTrust Capital. Check their link out below. We're going to take a quick 30 seconds to thank them and be right back.
Do you have an existing IRA or retirement account? iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is, they make it simple. All you have to do is transfer your preferable amount of USD through iTrust and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrust Capital.
All right, guys, we are back. Let's rock and roll real quick. We have Bitcoin that we're going to go over real quick here. So, number one, Bitcoin is pulling back a little bit today. In all fairness, doesn't really change much of what I've said here in the previous kind of videos, so just be aware of that. One of the things to keep in mind, we still have that inverse head and shoulders. As of now, it is still intact. So, again, that is still something that I'm paying attention to. But please remember, and this is so important, it has not triggered yet. As long as it's untriggered, to be honest, it's just something you're watching. It doesn't mean that you should be even more bullish on the chart here. So please understand that, is that once it triggers, yes, then the probabilities start favoring that upside move to the upper end of the range right up here, but not until then. On the inverse side, and a good trader looks at the bullish and the bearish case, the bullish case is, needless to say, maybe this triggers. The bullish case is we're still in a channel pattern that is still a bullish channel following this big up move. It's basically a flag pattern. Here's your flag pole. Here's your flag. So those are the bullish sides. But the bearish side would be if we ever trade below here. So you trade below right now. Looks like that line's around 57,000. Then Bitcoin gets in trouble. That's where Bitcoin probably goes down to about 52 to 49,000. But right now, you do, if you have to probabilityize it, if that's even a word, you're basically looking at a probability, probably about a 60% bullish to 40% bearish, maybe even 65% bullish on the chart. You break above here, it probably jumps to 80% bullish. You break below and confirm here, it probably jumps to about 75% bearish. So again, the levels to watch, know your levels, know your probabilities, and then you can decide, is there a trade here for me? Right now, to be honest, there's not much of a trade, maybe a slight long bias, as I've said. Ethereum is of concern to me. So I went over this yesterday, but I need to go over it again, guys, because you continue to hammer on this trend line right here. And my concern is this, is that the door analogy that we talk about is that the more you hammer on that door, the weaker the door becomes. Well, you've now hammered on this trend line more and more times, and a lot of times, almost every candle for the last 4 or 5 days has been hammering on this support. So if this line breaks, and this is, remember Bitcoin had that lower line, but we're not on it, right? We're not at the lower line of the channel. Here on Ethereum, we are. And that is a concern. So it hasn't broken yet, but right now you'd rate this as a neutral chart because of how many times it's hit on that level. And should it break, you're likely headed to 2650, 2400, and then close to 2100. Those would be your 3 supports. And listen, the first one could hold and maybe it rallies off of that. We don't know, but those are your levels to the downside. All right, quickly just going over, we'll do one more crypto today. Let's do Salana. I haven't looked at this in a little while, so let's take a gander. Let me just draw a couple trend lines here. If we draw this trend line, so this is really the line we're watching, right? So on Salana, we have a trend line here that is much the same as Ethereum, right? You have this one that goes back to October of 2023. It hit. It even pierced briefly, but didn't confirm. Remember the confirmation signal, guys. It didn't confirm that a breakdown occurred, and it rallied back up, and then it hit a couple here. So as long as you're holding this line, basically you have a scenario where you have a little bit of a down-sloping trend line, little wedge pattern forming here, right? So at some point, it's either going to break out or it's going to break down. Now, which way is it going to go? To be honest, I don't even know that. I don't even have a high probability on that. I do favor the downside a little on Salana because I still think that overall there's a lot of meme and scam coins that have been brought out, and I do think that as those get flushed out, it may bring Salana down just a little bit. But again, overall, just watch the charts. That's the beauty of it. You break here, then and confirm, you probably are headed down to about $100 or so on the chart. Going into gold real quick here, guys, as we look at gold. Gold is having a small bounce, minimal price action on gold at this point. Everyone's just waiting on the CPI data tomorrow. Even today's action, we know that the PPI data didn't have much impact, maybe a slight negative bias to the markets. But today, a little bit of a move up on gold after a down move yesterday. Remember, this is your line down here, right? So this one right here, as I'm drawing it as well as I can, if you break below this, you're likely headed to 2200. As long as you hold here, you may test your topping tail double top. And again, you can almost see it's starting to form a wedge pattern in here that eventually we'll have to make a decision on that one. I still favor mid to long term. I'm a huge bull on gold. Shorter term, I'm kind of mixed on it just based on the price action. Silver today, a little bit of upside action. Silver's had a good bounce. And remember, as I explained yesterday, silver is an industrial metal as well as a store of safety. So when people feel good about the economy, which they do recently, that's why the stock market's near the highs. The Fed may start printing again, all these fun things. That is helping silver outperform gold in the short term. But if the market gets scared about the U.S. economy, then you could very likely see this roll over while gold actually stays strong. Lastly, we just want to touch on oil here. Oil is on watch for a potential breakdown. Oil again, we've been hammering. Remember this, what we talked about on Ethereum, how the more it hammers, the weaker this line becomes? Well, you can see it happening on oil too, right? Same sort of trend line, hammering on this level. If we break to the downside and confirm, oil honestly probably headed to $70 a barrel or even lower. And lastly, guys, natural gas. Natural gas is one for me that I am eyeing as a potential short. It got very close to my line. I gave you guys this target line of $2.52 to maybe 53 as well. But it got so close today, a little pullback. Let's see if it can push up, and then I might nibble on a small short on natural gas. Like I said, if any sort of pullbacks takes us into here, this is your buy zone. To me, this is major resistance. You have your resistance level, you have your support level, and you can trade from there. So, listen, it's been a wild morning already. I've already been trading myself. I was up at 4:30 in the morning Eastern time here. And basically, watching this GameStop, watching these AMC moves, watching the PPI data at 8:30, it is going to be wild. And I will be here trading live in the Apex Live day trading room with many of you out there watching. I know a lot of you guys are part of that. And just listen, putting out trade alerts in crypto, the crypto subscription, as well as the commodities and stock ones. There's a lot of action here, guys. It's going to get crazy. Be ready for that. Talk to you soon. Take care.